So, someone asked me a question recently about our investing strategy. And the first thing that I said was that we're lazy investors because we just invest it and forget it. Like we just deposit the money and we don't necessarily look back. Quite frankly, I do believe we are boring investors um, because it's not what we do isn't sexy.
Yeah, but it's been proven that slow and steady wins the race.
Welcome. This is For Better and Worth.
The podcast where we don't believe you have to sacrifice your relationship while you grow and build your net worth.
We are your hosts.
I'm Chris.
And I'm Erica Young. And we're so glad you're joining us today.
All right, y'all, let's get into it. Hey, babe, how you doing?
I'm good. Our football teams are playing today.
Yeah. You know, Saturday and Sunday is always football weekends during football season. So, but as much as I like football, I can't sit all day. I know some guys can sit all day and just watch football, but I got to get up and do other stuff because I travel a lot. So when I'm home, I got to get a lot of stuff done.
And I am not into watching. Even, on TV, I feel like I am a 1/4 girl. Like,
You got to at least make it through like half a game.
I mean, I do in person. And then after halftime, I start checking out and I start missing plays.
You start checking your phone.
And no, I don't. I don't pull the phone out very much, but I'm talking to people, right? Like I'm having conversations.
I'm like, hey.
No, you over there enjoying the game, and then I'm like having conversations.
What happened?
And then when
you ain't see that play,
somebody has a touchdown, I'm like, oh yeah, and I stand up as if I watched the entire play. Right. Like, but I mean,
it's all good.
On a scale from 1 to 10, how much do you like football?
I mean, I'm a solid 8, 9.
Really?
Yeah.
I would have thought you would have said 12.
I mean, I like football. Of all sports, it's my go-to sport, and I like football the most. But I think even for me, like after about 2-3 quarters, I started to check out, especially depending upon my team, how my team is doing.
Yes.
Because I'm like, I need to stop watching this because I started getting like stressed out.
Well, our team right now, IU is doing very well this season, so I'm expecting that today will be no different.
Yeah, I mean, I got a couple of teams that,
Here's who I'm representing today. But anyway, yes, we are also Michigan fans.
Yes.
And we believe that they're going to come back and do some things.
They're still doing that. I mean, they got a decent season going.
Yeah, but not like it was.
Well, you rebuild. All I care about is beat Ohio State.
Yes, that game is the one that actually matters the most.
Stank.
So, anywho, on that note,
it's a good spot to transition.
So, someone asked me a question recently about our investing strategy. And the first thing that I said was that we're lazy investors because we just invest it and forget it. Like we just deposit the money and we don't necessarily look back.
I don't know if that's lazy.
It's not. So I had to reframe it.
Yeah.
And say, quite frankly, I do believe we are boring investors because it's not what we do isn't sexy.
Yeah, but it's been proven that slow and steady wins the race.
Yeah, we're tortoises in this race.
Yeah. And I think that sometimes people think about investing and they overcomplicate it. Mm-hmm. And they get involved with stuff that they don't understand and don't know how to manage it. And at some point, they probably shouldn't be involved in some of those things. Mm-hmm. But like you have clients and you have conversations. I'm out in the wild talking to people.
Yes.
So
do you see them like getting into stuff that they don't understand? So
I feel like, and when I say I'm out in the wild, I talk amongst my coworkers and people I interact with at I see a lot of industry folks at conferences, but just in day-to-day conversations, I think people just don't understand a lot.
Sure. Yeah.
And so I think that more people than we would estimate actually just invest into their 401ks.
Mm-hmm.
And they'll do some of the other things that we'll get into because they know that's another means to create wealth, like real estate is the other area that I see a lot of people get into. They'll have a second home or a lake house or a vacation property or whatever. Or I know a few people who had like rental properties, but I think they see real estate as the other white meat.
The other white meat.
Yeah, so it's like they'll see real estate as another means to do
Mm-hmm.
things, but if you start asking them questions about like, well, what are you doing? Your 401k, or do you have other investments? They're like, man, I don't know.
So I think a lot of people don't know what they're doing, why they're doing it. They have no
Yep.
strategy.
Yep.
And
I would agree.
this is why you need, I think, to talk to a professional. But I want to clarify why I feel like we're boring.
Okay, go ahead.
So I feel like we're boring with our investments because one, we started off with like a lot of our money is really in tax favored accounts at work. So
Mm-hmm.
that's like literally one medium. And then when we've left jobs, those turned into traditional IRAs somewhere else. But really, our main investment vehicles, like what we have used
Or
is,
tax deferred
yeah, the
vehicles.
401k at
Yeah.
work. And so a lot of people can amass, if you continue to do that without stopping and without touching it, then you can amass wealth over time in those accounts. And so we haven't deferred from that. It's boring because that has been our main vehicle. We haven't really done anything else. Of course, we own a home. I don't even consider that a part of our retirement strategy other than when it's paid off, we don't have to pay for it, right?
Right.
So it's not an
That
expense
frees
anymore.
up that frees up living costs in
Yeah.
retirement. It reduces living costs in retirement. So I think it makes it easier for us to retire when you have a paid for a home.
Absolutely. And so it's boring because it's that one main path and people think, oh, well, it can't be that easy. Like they're like, well, hold on a second.
Right.
That's not sexy or interesting or
Yeah.
exciting. It's just boring.
But
And
I have to interject. And
okay.
I have to say that like when you first start out, we weren't making a ton of money.
Mhm.
I think we had an above average income combined, but we had debt. We started having kids early, so we incurred expenses. We bought a house and so on and so forth. We were following the American dream. And so at one point, all we could afford to do was to invest in 401ks.
Mhm.
And for a period of time, we were putting in like one of them and we were paying debt down. So we weren't invested in both. Then we started to say, okay, now let's take the next step and invest in both 401ks. And then we took the step and said, okay, while we can, let's open Roth IRAs and start investing in those. And so we were taking gradual steps to begin to diversify our, investing strategies and portfolio. And then we started to make more money and our incomes increased. Then we weren't eligible to invest in a Roth IRA. So it was like, man, that was short lived. And I think it's just been, levels.
Mhm.
And though they may still be boring because we haven't changed. We just went from investing a smaller amount in the 401ks to fully maxing out
Mhm.
the 401k.
So, and I think the other reason why we started with our 401k, of course, is because of the free
Gotta
money.
get that free
We
money.
got to get that free money because that's basically 100% return on your
Yeah.
money. But it's also boring because it's all mutual funds. Like it
Yeah, it's
literally
not
is.
individual stocks and
We did not do, well, we did some individual stocks and we sold it. So when you have a stock purchase plan at work, we did
mhm.
that as a means. It was really a savings account, a little extra
That's immediate
interest.
15% gain though, because you're buying it
Exactly.
at a 15% discount. So
Yeah, we just didn't leave it in there. It wasn't
right,
for retirement. It was not for long term. And so but so we were doing that, and that was a little sexy, right? That was a little more interesting. But I think because we just invested in our 401ks, in mutual funds for the long haul, didn't touch it, didn't pull it out, didn't stop doing it, and
yeah,
always increased it, we have been able to get to where today we can say if we wanted to stop working, we will still, our
we'll be
money
all
will
right.
still continue to grow and also take care of us
Mm-hmm.
in our retirement in a healthy way. And um, so that's good news.
Yeah,
But it's also people think it should be more complicated, it should be more interesting, it should be more exciting. And I think people believe it is more complicated. And so they don't even participate at the
yeah,
levels that we're talking
yeah.
about.
I think that's the fun. That's the funny part is that people overcomplicate it, and so then they check out.
Hmm.
And if it's not like super sexy, like I work with someone, and I was saying, well, what do you do? Buy gold. They buy like gold and silver, but he's kind of a conspiracy theorist, and
See, you know what? There's
so he's
always something
like,
else behind it, right? Like when you
yes,
start asking people, okay, when they
right,
want to do some extra stuff in
right.
their
Should
life,
should should society fall? He wants to have gold for trade or whatever, but
no
like
one's gonna care.
people want to do stuff like that. Like, well, the price of gold has been whatever, so I need to invest in gold. And then Bitcoin came along, and people want to buy, fractional shares of Bitcoin because, Bitcoin has shot up, and it's pretty expensive to buy a single Bitcoin.
Hmm.
And so then people start talking about,
Crypto.
ETFs
Yeah.
and, well, Bitcoin, other cryptocurrencies and
Hmm.
ETFs and, you know, uh, dividend funds and all types of different things. And I got to build up a real estate portfolio. I've got to have multiple, investment properties. And we've had investment properties. So I guess we did like a little bit invest. We didn't have, let's be honest.
We had one.
We didn't have investment property because we were like, this is part of our retirement plan.
No, we did not. We did not intentionally do that. Matter of
Right.
fact, let's
We were accidental real estate
listen,
investors.
and we got burned. So we basically moved out of a house and then just rented that house because we got another house. And we did not, you're right, we did not do that for a retirement future. We kind
we
of
we put it on the market to sell, and that's right when the market was taking a slight slump in '06. And then we
or
were
oh
like,
eight,
no, it was
oh six.
'06.
Okay.
Yeah, it was '06.
Okay.
And then we were like, you know what? We
Yes.
want to we want to be real estate,
We want to try our hand
investors,
at it.
so let's hold it. And I don't regret many of our financial decisions. And that's one. If I could go back to my 2006 self, I would have said, man, if you don't sell this house,
Reduce the price. Like I think that was a source of pride when
yes.
it was our first home, and there
It's
was
like
a
if you don't reduce this price and sell this house and get your money and move on.
yeah, it there was this part of us that was like, this is our first home, and we didn't want to take reduce the price. For us, we felt like it was worth the price we had
I'm
put
gonna
it up
call it
for.
what it was. I'm gonna call it what it
What
is.
was it?
We were being greedy.
Yeah.
We were being greedy because the price had more than doubled.
Yes.
The home had doubled in value.
We had seen homes sell for what we
Yes.
had put it up for, but the market was
Yes.
softening. And so because of that, our timing was off to get that
Hmm.
price that we were trying to get.
We could have sold for double, but we wanted 2.5.
Yes, yes,
We
times
wanted
it.
that 2.5 factor versus just the two-time factor. So I say it
Exactly.
was just greed.
Yeah.
But, I learned a lot from that whole situation. And we held that real estate for a long time and
Hmm.
kind of paid the price for not, dropping it.
When did we sell it? What do you remember? What year was it that we sold that?
Well, it's gonna sound crazy, but that was only like 4 or 5 years ago.
Yeah, yeah. I thought it was about 5 years ago.
Yeah, so
Yeah.
we held it for a long time,
Mm-hmm.
but
Mm-hmm.
but the good thing is that how we say, but God,
Yes,
He kept us.
he
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 kept us safe
he restored
those
our.
long years.
That's right. That's right. He restored our real estate portfolio with our current home. And then the other thing that
And even though we held that property for a long time, it paid for itself by and large. There were only a handful of months that we actually had to pay the mortgage, and at the end we invested in like some upgrades, but we were able to recoup those funds at the sale. And so that was the good part.
I mean, I would say not at the sale. We recouped it when we pulled dollars out for our next home.
No. I'm talking about when we sold it.
Oh, we got like a few $1,000s, but not
But
much.
I'm saying we put money in to fix it up so we could sell it.
Mm-hmm.
And we were able to get that money back plus a little.
A little tiny
Yeah,
bit.
it wasn't a lot, but I'm just saying, like, the point is that I'm making is that God kept us,
Yeah.
even though I felt like we made a poor decision.
Yeah.
And there's not many times that I really look back and say we made poor decisions, but we all live and learn, and our journey hasn't been perfect, but I think when people are looking for something sexy, I'm like, okay, are you sure you want to get into what you're talking about? But what are you thinking when people are looking to be sexy investors? What does that mean to you?
They're trying to do something more than just put it in mutual funds that are diversified between just the four different asset classes, or the five different asset classes, which
Hmm.
are just small cap, large cap, corporate, like basically the companies in the US,
Hmm.
domestic products that or domestic companies that are small cap, large cap, international. I mean, some people might do bonds. They could do bonds
Right.
as well to balance it out a little bit. Um, and mid cap, like this is my whole thing. That's it. Like that's what we did when we're talking about investing in mutual funds. We have a variety of those, kinds of companies that we're investing in, and it just makes for a balanced portfolio. And quite frankly, the other thing is, although we are potentially 10 years away from being able to step away from working, we're not changing those investments yet. So that's it. And that's what we've always done. And now
Yeah.
people can do things even on more autopilot by having an investment that is um
And
that
mirrors the
is
S&P.
well, that, but also that is actually geared towards their age, right? So the
Hmm.
age-based funds that get a little bit more conservative the closer that you get to retirement. And again, that's on autopilot. So if it is outside of that, then people say, "Hold on, I need something a little bit more sexy." And it is, I want to buy rental property. I want to get into crypto. I want to do all these other or individual stocks. I should have bought that stock. And we always say this. We should have bought Costco stock when it
In
was
99.
years ago, right? And so we do
Right.
think
But
about those things.
woulda, coulda, shoulda. Or if I knew then
Mhm.
what I know now, we would have bought Apple back
And
then.
and so like if it is outside of those simple straight path to building wealth, then we think that there's something wrong. Like they want it to be outside of that. They think, oh, it's got to be more complicated than that. And the truth is, we've seen our money grow, and it's now
Consistently.
consistently, and it's beginning to be exponentially, because I'll be very clear,
Yeah.
it took a long time to get to certain levels, and now it's taking way less time
To get to
to
the
get.
next level.
Yes,
And then
yes.
take less time to get to the next level.
Right. And so let's just be clear. Boring works.
Yeah.
Boring pays off. And I think for us, at our story in terms of real estate, it was stressful. And anybody will tell you, no one's saying these other things are easy. But think about the whole idea of buying stocks or being a day trader. That's sexy to some people. And being a day trader and the stress associated with every single day you have to be looking at these numbers and
Right.
making sure that you are not taking a loss. And then a real estate, like a property or multiple properties. We know people who have multiple doors that they are responsible for. They have lots of families who live in their rental homes, or they might have an Airbnb property or two. And like when you're looking at the responsibility it is to keep up with the
Mm-hmm.
maintenance and um, keeping it clean and managing the logistics, even if you have a property manager, because we had a property manager and we still, it was stressful and we still have regrets about that
Yeah,
property.
we
And
didn't have
so,
the right property manager,
well,
so
but that's not even it. That wasn't
yeah,
the whole story. I think the whole we had tenants that were not great.
yeah,
In
that's
addition to
definitely
you, and you
having
can't.
a bad tenant and a not so great property manager is not a good recipe for success.
Exactly. And you are not 100%, you don't know if your tenants are crazy.
Right.
So you don't know if
Until
somebody's
you find out.
you don't know if on, the Airbnb that somebody's going to come in there and have a party even though they're not supposed to. You don't know if the market is going to tank when you are in the middle of trying to do, trying to short stocks and things like that. Like you
Right.
don't know. And so when we're looking at all of these other sexy things, we're banking on like short-term wins, or and we have a lot to manage in the short term. You and I get to be boring on our investments because we're putting it in there and we're believing that over the long term, things will
Hmm.
work out in our favor. And so far, I mean, 2.5 decades in, it's working out in our favor.
I'll say that there's nothing wrong with those other investments either. You
Okay, so
know.
let's ask this question though.
Well, let me finish my statement though.
Okay,
I mean,
okay.
people can do what they choose to do. They say, don't throw the baby water out. Don't throw the baby out with the bath water. So you can pick and choose what you want to do, but I think going into it, I would encourage people to do more research, more due diligence, and like you said, understand that it still may not be an easy road. Like you may buy and hold gold. Okay, that's cool. Price of gold seems to be it's been consistent. You might get into real estate, but real estate requires a lot of work. If unless you are buying it, flipping it for a profit, and still
That's
that is
work.
work.
That's still work.
Because you got to manage construction projects and crews and vendors, and that is stressful in and of itself. And all the other things you were touching on, individual stocks that has, I mean, day trading is its own thing to get into, but buying and selling stocks, that can have some benefit, but it can also have downside. It all has risk associated with it. So you have to be willing to endure the risk and take on the work. We I don't think we wanted to take on a whole lot of work. And even today, as we consider new and additional strategies that we're adding on to our portfolio, we're very methodical in what we're choosing to do and how we're choosing to add, things, be it direct indexing or, you know, um, just opening up other brokerage accounts, which are still going to be, mutual funds or stocks that we pick and choose, or real estate. We'll be very particular about real estate that we invest in because it's going to be for the long haul. And I think that's the big difference for us is that we're long-term investors versus short-term investors who are looking to get a return right now.
Yeah, I think that when we talk about boring, it's really, we can have a hands off approach. And we also have an advisor that we can talk to. And so I think the thing about a lot of this is when you don't have somebody who has gone before you to help you understand how to do it, that makes the lift heavier. Like it's more that's what makes it more work.
Yeah.
You make we make mistakes when we don't know what we're doing, right? And so you need people that are going to help you go down that path. And so my question to you is, some of these other quote unquote sexy ways of investing, would you do them? I mean, honestly, like we did real estate, so I feel like that could be maybe off the table, or unless, or would you go back into doing what we did, like a long term and rental property? But would you do some of those sexy things?
I think for me and for us at this stage, I would entertain real estate with a purpose. Like we want to have a family vacation home. And so that to me is a little bit different because that's something that I'm looking to buy and invest in to have experiences with. So it's not necessarily I'm looking, I mean, I always want my real estate to appreciate. I will want whatever property we invested in to appreciate, but I would be buying it for a purpose of having experiences with my family. And so I'd be very selective about where and what and why, but my why is to, have experience with my family. So I feel like that's a different sort of investment.
Yeah, it's not for retirement
Right. It's
specifically.
not specifically for retirement. So when I think about real estate, I'm always thinking about it now in that context.
So what about the other ones?
I'm getting, man, you asked me a question. Let me
I'm just
answer.
curious. Go
You like
ahead.
impatient.
Am I though? Am I? I don't know. Okay, go
But
ahead.
like some of the, and I think it's funny talking about some of the other things because we have friends and, a couple of my buddies were talking about, these different ETFs they were looking at because they were paying dividends. And I was like, it's cool. They put money in and they were getting, either a monthly or even a weekly dividend, which, is cool.
How much? What was the return on it? Do you know the dividend on
I
it?
mean, I can't recall,
Oh,
but it
okay.
was it was a good enough dividend that they were looking to like
Hmm.
make money now. And I know some of those funds they have been around for a shorter period of time, so the track record and histories aren't there. And then if that fund closes, another one typically opens up. So you got to be able to just it's akin to day trading almost to me because I mean you'll get a return, but what's the life of that fund and what's the longevity of those funds? And I'm less akin to lose money just to try and make immediate money. I'd rather make money in the longer term. But like Bitcoin, I learned and understood some things about Bitcoin, but that's probably not something that I would choose to jump in. Gold, not really what I'm looking to do. And there's nothing wrong with those other things, but what works for us that has been proven over time is to remain consistent and get returns that outpace the market or match the market, at that 8 to 12% rate of return. So we're outpacing inflation. When we start to draw down, we'll be able to draw down at 4% and our funds will last us for, 30, 40 years after we choose to retire. So I don't know how many of those I would really look to get into. I'm entering the phase of life where I want to enjoy life. I want to, I don't want to press the easy button, but I want things to be more of a slow, smooth ride.
Yeah, yeah. I'm gonna tell you honestly, very,
I
very.
mean, would you do any of them?
No, actually, no. And I hesitate. I do want one piece of real estate, as you stated, like a family property that we can rent out sometimes to other
Yeah,
people in an Airbnb type of situation, or just to family and friends. But the truth is, I would never. This could be a never for
wow,
me.
that's a strong word.
I would never day trade. Um, I am not as interested in individual stocks in terms of it being a part of a long-term strategy. I don't feel like it's a full-on regret that I didn't
Yeah,
invest in Costco or Apple, but I do understand that people have made tons of money there. It doesn't it's not off-putting to me. I'm just like, hey, you know what? It's in my mutual fund somewhere, so I'm
yeah,
good. And then I don't get attracted to trendy things because I think like crypto, Bitcoin, all of that is trendy right now, and that's fine. I don't get moved by it. And I think it's also because we have, and here's I think the thing that we have to be very clear on. We have in our portfolio experienced the dips of the market.
mm-hmm.
We have seen our funds go down to levels where we were talking
You're
about
like,
it
ooh,
like, ah,
that hurt.
that hurt, right? So it's not that what we're like it's boring because it's not risky, because that's not
Yeah,
true.
it's still risk.
But we have reduced our risk because, again, we are invested in 5 different asset classes within our mutual
But we've
funds.
also seen those dips come back double,
Absolutely. So
come back in
even
droves.
this year, when we experienced a big old dip, when the tariffs were introduced and people were all
Yep.
wondering what
Our
was going to
portfolio
happen,
took a hit.
everybody's took a hit, ours included. And the more money you have, the more painful
Yeah,
that dip
that
is.
hit is bigger.
Right. But then it came back, what, within a month? And so, like, when we're
And then a
looking
month
back,
later, it was double.
it was
So
fantastic. And so when we're looking at this, like, it's not like we've not experienced a roller coaster, because we have.
yeah,
But and so it's actually still an interesting ride to see it go up and down, but it's trending up all the time. And so that part isn't actually boring, because it does make our hearts
yeah.
palpitate a little bit. But
As
in the
long as it's up and to the right, and those dips are up and to the right,
Yeah.
I feel like it's okay.
Yeah. But so we have seen that over time, and we still been able to amass what I will say is the
It's a solid portfolio.
solid, going in the right direction, feeling good about that
Yeah.
overall, you know?
I think when you talk about it, you know, I would only individual stocks I think I would dabble in are just companies that I really believe in and invest in
Yeah.
like regularly.
And it's okay for us to be different
Yeah.
on that too. I think
But I think that's because I believe in those companies, and so if I like, and we go back to Costco a lot, but we are big Costco shoppers. We love
clearly
Costco.
we love our Costco.
Yeah, and so I'm like, I believe in them fundamentally, how the company is managed, how they treat the employees and how they feel about customers. But I think that plays into how they typically have performed in the market as well. So it's less of a risk. We're doing research on a company firsthand
Mhm.
versus when you're investing, you have to do a lot of research in a company to try and find out some of those strategies. I feel like we just do firsthand research with them. So supporting companies like that or other companies that I buy their brands or invest in their products a lot, I feel like that's less risky for me
Mhm.
because I believe in it.
Mhm.
So that's
Mhm.
that's kind of my thought about individual stocks. But
Well, I'm going to jump right on in to make it worth it,
okay,
you
let's do
know.
it.
I feel like my make it worth it is that I mean, maybe it's obvious, but y- saving for retirement probably shouldn't be sexy.
Yeah.
These other ways to invest are there for you if you choose to go down those paths, but long term, make certain that you know what you're doing, you've talked with people, you've done your research. Um, you can build a real estate portfolio that retires you. That's what a lot of people in the fire community do, and hats off to them. That's great. But and some people can retire maybe on one stock if they bought it long enough ago and it really hits, you know. But the thing is that I would say, your retirement investing doesn't necessarily have to be sexy. You can win without the sex appeal.
Yeah,
So what would
I
you
like
say?
that. As you were talking about that, it brought something to my mind. And when I think about make it worth it, get your foundation right. And that's where I feel like that's the quote unquote boring part of it. We got our foundation right. And when you have a solid foundation, you can build upon that. And if you want to do some other things, as long as the foundation is right, you can add on to it because the foundation is what keeps everything together.
Hmm.
And so I say, make sure your foundation is set, because a lot of times, depending upon where you're at in life, you want to get the match, then go and do a Roth. So you've got money going into your 401k and you're getting the free money, then put extra money you have in a Roth until you can max it out. That way you're getting tax deferred and tax free gains. And then when you max out the Roth, go back to the 401k and max out the 401k. That's a solid foundation.
Hmm.
And then we start talking about other things about how you have, emergency funds and savings, but that's not necessarily for retirement. But I guess my make it worth it would just, if I had to simplify it, just get the foundation right. Because when you get the foundation right, that's what you can build on, and you'll have the ability to have a strong future. So,
Let's go. Let get the foundation. I love it.
yeah.
So That's awesome. I hope this was helpful because I feel like a lot of times, people sometimes we say what people don't want to hear.
It's okay.
And
We're
it
gonna keep
is.
saying what we're gonna say.
We are.
You can feel how you feel, but
Yeah.
the proof is in the pudding.
It is.
And
It is. And I feel like because we're well on our way to the kind of retirement future that we could be proud of. I mean, we get to say what we have today because it's worked for us.
yeah, and I think before we sign off, the other proof is that the next gen behind us, our kids, they are setting solid foundations. Because I told them we're giving you the cheat codes. And with the cheat codes, you can just, have advancements that you wouldn't have if you didn't have those codes. And by giving them those cheat codes, they're able to establish a foundation much earlier, much sooner than we were. And so that when they get married, they'll already be well on their way and they can go and create a path forward. So I think, it works. So
Learn it and then pay it forward.
right. So until next time,
We're out.
thank you for spending some of your time with us today.
We appreciate all of your support. So be sure to subscribe, rate, and review us wherever you listen to this podcast.
You can find us on Instagram at For Better and Worth.
And sign up to receive our free guide, The 7 Reasons Your Money Relationship Isn't Working with Your Partner, on forbetterandworth.com.
Until next time, we're out of here.